Hey, what's up, you guys? How y'all doing today? This is Joe Martin, 750 credit score, big brother, coming on here live and direct, unscripted. I wanted to come on here and talk about a few things, and I want to share some information with you guys so that you could really leverage your situation. You could change your situation. I know a lot of you guys have goals, and you got things that you want for your life and in your life, right? And I do want to let people know that you can accomplish these things that you want for your life and in your life. You can accomplish these things. Now, you have to apply action. You have to move your feet. You can't procrastinate. I see a lot of times people procrastinate on doing things that they have to do, right? I wanted to just talk about simplicity, my new system. But before we even talk about business, let's talk about certain things that you have to do to position yourself to get in a better position in life, period. Okay. One of the first things that you have to do, hey, what's up, Felicia? One of the first things that you have to do is you have to correct your situation when it comes to your credit. Okay. Chuck, what up, Chuck? You got to correct your situation when it comes to credit. Okay. So we're going to open up this conversation and we're going to talk about credit. Okay, we're going to talk about credit. Now, it's 5 factors combined that's creating your credit score. Okay, it's 5 factors combined that's creating your credit score. All right, payment history, utilization, age, mixture, and new credit, which is inquiries. Okay, so let me break this down to you. I don't have my whiteboard, so I need you to write it down if you can. Okay, now, the lowest credit score that anyone could possibly have is a 300. Okay, that's the lowest score that anybody could possibly have. The highest credit score that anyone could possibly have is a 850. Now, the distance from 300 to 850 leaves 550 points in between. So the 550 points in between the 300 and the 850 is points that's available to you. Now, these points are available to you, but you have to know how to get them, okay? So, payment history makes up 35% of your score. Now, if you're wondering where that 35% is pulling from, the 35% is pulling from the points that's available. So, 35% of 550 points is 192.5 points. Okay, so from payment history, you're getting 192.5 points. Now, if you have collection accounts, charge-off accounts, derogatories, negative, late payments, anything that you got that's deemed as negative towards your file, you're going to miss some of that 192.5 that you're getting from payment history. So when you start removing these derogatory items off your file, you'll start getting your points back in that 192.5 from the 35%. Okay. A lot of times people ask me, hey man, how many points do I get for every collection account that I move? It's impossible for somebody to tell you exactly how many points you're going to get from that particular derogatory item because it's all calculated in the algorithm. Okay. But just know that if you don't have anything negative on your file, 9 times out of 10, you'll be getting that whole 192.5 from the 35% of payment history. Okay. So payment history makes up 35% of your score. And in that 35%, you're getting 192.5 points. Okay. So that means if you have anything negative on your file, late payments, charge-offs, collections, anything derogatory is pulling away from that. So the first thing that we want to do is we want to go ahead and get the negative things removed off the file so that you could get all of that 192.5 that's coming from the 35% of payment history. Okay. I'm talking slow because I want you guys to really understand what I'm saying to you, and I want you to really get it. Now, this video is not going to be up after I leave. Once I press the end button on this video, you'll probably never see this video again. If you do see it again, I'm going to take it and download it and clip out certain parts of this video and put it out into my marketing campaign. Okay, so you guys, whoever is on here right now, have the privilege to get this information that I'm using for content for whatever I put out in the future. So you got the privilege to get this information now. And that's why I'm talking slow, because I want to make sure that you get it, and I also want to make sure that I get the right content that I need when I start putting out this marketing information in the future. All right. Now, we just talked about payment history. The next thing that we're going to talk about, my phone ringing, y'all. All right. So I'm going to wait for this phone to hang up. It's always like when you try to do something, the phone start ringing. Okay. I'll answer that in a minute. Here we go. The next factor is utilization. Utilization makes up 30% of your score. So in that 30%, you're getting 165 points. Now, in order for you to even tap into utilization, you have to have a revolving account. Okay. What is a revolving account? A revolving account is a line of credit or a credit card. Okay. A lot of people always say, Joe, I don't want no credit cards. I don't like credit cards. I don't want nothing to do with credit cards. But I tell people, in order for you to have good credit, you have to have credit cards. Now, the reason why people are scared of credit cards is because they don't understand how to use credit cards. Okay. Now, before I even jump into how to use a credit card, let's talk about how many points you're getting from utilization. Okay. Utilization makes up 30% of your score. So in that 30%, you're getting 165 points. Now, in order for you to even tap into that 30% of utilization, you have to have a credit card. You have to have a revolving account, some type of line of credit. Okay. Now, utilization makes up 30% of your score. So in that 30%, you're getting 165 points. Now, in order to get the bulk of that 165 points from utilization, you have to keep your utilization between 1 and 7% utilized. Okay, you got to keep it between 1 and 7% utilized to get the bulk of that 165 points that you're getting from utilization. So a lot of times people ask me, they say, Joe, so you mean to tell me if I got a $100 card, I can't spend more than $70 on that card? I tell them, listen, you can spend more than $70 on that card, but when you use your credit card, it's 2 dates that I want you to make sure that you call the companies and get. The first date is, what date is my due date? Now, whatever they tell you your due date is, a day or two before the due date, you need to pay the balance down to 1 to 7%. Because once it closes out, the next date that I want you to get is, what date do you guys furnish the information to the bureaus? That's the second important date. Okay. Now, the reason why these 2 dates are important is because if you got, let's just say, and I always use the 10% rule. It's the easiest for me to figure out my math in my head. So if I'm talking to somebody and they got a $5,000 credit card, the 10% rule, 10% of $5,000 is $500. So if you need to be between 1 and 7% used on that card, you know that you need to be well under $500 on that card when it closes out. Okay, so the 2 dates. The first date is, when is my due date? You need to know that date because 1 to 2 days before that date, whatever the balance on that card is, you need to pay it down between 1 and 7%. Okay. The next date is, what date do you guys furnish the information to the bureaus? That's the date that it's safe to use your card after that date. You don't want to use it before that date because it's a chance that whatever you use on that card is recorded into your utilization, which will reflect in your scoring through the algorithm from that 30%. Okay. So remember, utilization makes up 30% of your score. So in that 30%, you're getting 165 points. In order to get the bulk of that 165 points, you want to make sure your utilization stay between 1 and 7%. So whatever you got used on your card, when the due date comes, you need to make sure that you pay it down to 1 to 7%. Now, after you pay it down, don't use that card until after the date that they tell you they furnish the information to the bureaus. So if you got a due date of the 14th, then on the 12th or the 13th, you need to pay your balance down to 1 to 7%. And if they say, hey, we're going to send this information in on the 17th, then you know on the 18th, it's good to use that card from the 18th all the way up until the 13th again. Okay? Now, on your revolving accounts, you need to make sure you separate your dates so that you could play with your credit more. Okay? And let me explain this to you. Let's just say, for instance, if this card is due on the 14th, okay, and today is let's just say today is the 25th, and you got to make a payment by the 26th. Okay, you got to make a payment by the 26th, and today is the 25th, and you got a card that's due on the 14th, and you got a card that's due on the 5th. Remember, you want to make sure you spread your lines of credit, your credit cards. You want to make sure your payments are spread apart so that you could play with your credit. Now, follow what I'm saying. If it's the 25th and I got a payment, let's just say, for instance, if I got a $5,000 card, and on this $5,000, say if I got two $5,000 cards, and today is the 25th, and I need to make a payment on the 26th of something that costs $4,900, and I got two cards. I got a card that's due on the 5th, and I got a card that's due on the 15th. I'm not going to use the card that's due on the 5th because I know that due date is coming up quickly. So I'm going to use the card that's due on the 15th. Now, it's the 26th that I got to make this payment. If I use the card that's due on the 5th, I only got about 10 days to get that balance, get the money to pay that balance back between 1 and 7%. So I'm kind of putting myself in the crunch. So instead of me using that card that's due on the 5th, I'm going to use the card that's due on the 15th. I hope y'all caught that. Okay? I hope y'all caught that. So you got to understand how to use the credit cards. It's not about being scared of them. It's just about understanding how to use them and understanding when that utilization is being recorded on your file, because utilization make up 30% of your score. So in that 30%, you're getting 165 points. In order to get the bulk of that 165 points, you want to make sure your utilization stay between 1 and 7% utilized. You can use your credit card, but you have to know when to pay the utilization back down between 1 and 7% before it records whatever utilization you have used on that card. Okay, now let's move to the next factor. The next factor is age. Age makes up 15% of your score. So in that 15%, you're getting 82.5 points. Okay, in that 15% of age, you're getting 82.5 points. Now, age is something that's going to organically grow within your credit file. It's going to organically grow. So every account that you open has a date of birth, has a date that account was open. And from that date, that account has been aging within your credit file. Okay, so age makes up 15% of your score. So in that 15%, you're getting 82.5 points. Now, to get the bulk of that 82.5 points, your age, when it grows between 10 and 12 years average, you're getting the bulk of that 82.5 points from the 15% of age. Age could be fabricated. Now, some banks are picking up on this little loophole. Let's call it a loophole. And I'm going to explain the loophole to you. And let me explain to you how age is calculated as well. Let's just say, for instance, if we looking at Tim's file. Tim got 5 accounts on this file, and all 5 of these accounts was opened 5 years ago. So what we're going to do is we're going to take all 5 of the accounts and combine the years. So if I got 5 accounts all opened 5 years ago, combined, Tim got 25 years. So now we're going to take the 25 years combined and divide it by how many accounts Tim got. Tim got 5 accounts. So 25 divided by 5 is 5. So Tim's average age is 5 years old. So based on the fact that Tim has an average age of 5 years on his credit file, he's getting some of that 82.5 points that's coming from the 15% of age. Now, it could be fabricated. Let's just say, for instance, if Tim called his grandmother and he said, hey, grandma, how many credit cards you got? And grandma say, well, Tim, I got one credit card. It's 30 years old. And Tim say, well, grandma, can you add me on that card as an authorized user? Let me explain what an authorized user is, okay? Every account that's on your credit file has a type, right? It's a primary account or a authorized user account. Now, a primary account means that you are individually responsible for that account. That's a primary account. That means that you are responsible for that account. An authorized user account is grandma has a primary account and she's adding Tim on this account as an authorized user. So grandma is primarily responsible for that account, but Tim is an authorized user of that account. Now, everything from grandma account is going to track over on Tim file. Okay. Now, when grandma added Tim to her account, let's go back to Tim. Remember, Tim had 5 accounts that was all open 5 years ago. So combined, he had 25 years. And then we took the 25 years and divided it by 5. So that gave Tim an average of 5 years on his credit file. Okay. Now, grandma added an account to Tim file. So Tim no longer got 5 accounts. Now Tim got 6 accounts. Okay, Tim had 25 years combined, but grandma just added 30 to his 25. So now Tim has 55 years combined. So we redo the math. Instead of us doing 25 divided by 5, now we're going to do 55 divided by 6. And now Tim's average age just went from an average of 5 years to an average of 9.1. So when Tim's age went from 5 years to 9.1, now Tim got more of the 15%. So he got more of the 82.5 points added to his file. Okay. Now it's a double-edged sword on that too. So, and let me explain that to you. Let's just say, for instance, if Tim didn't call his grandmother, if Tim just added a new account, okay? Now, Tim no longer got 5 accounts. Now he got 6 because he just added a new account. Now, that new account that Tim added, it got an age. So it ages like a baby. So it got to go 1 month, 2 months, 3 months, 4 months, 5 months, all the way to 12 months before that account becomes 1 year old. Okay, so let's just fast forward a year. Okay, Tim no longer got 5 accounts. Now Tim got 6 accounts. Okay. Tim no longer got 25 years combined because he just added a new account that just aged 1 year. So now Tim got 26 years combined. So now we redo the math. We do 26 divided by 6. Now Tim's average age just went from an average of 5 years to an average of 4.3. So when his age went from 5 to 4.3, Tim lost some points. Okay, so it's a double-edged sword. So keep in mind, a lot of people go out here and they add a bunch of new accounts to their credit file. Let's just say, for instance, you got a lot of people that might take out payday loans. And you just thinking like it's okay because I'm just going to get this payday loan until I get paid and I'm going to pay it off. So you thinking it's okay. But every time you add a new account that actually reports to your credit file, it's lowering your age. So every time your age lowers, you're losing some of the 82.5 points that you're getting from the 15% of age. Okay? So remember that. So keep that in mind. Don't add too many accounts to your file per year. Okay? Now, just note, always have a mission and a goal when you out here using your credit, right? You don't want to add a whole bunch of accounts to your file, especially a whole bunch of young accounts to your file, because if you add a bunch of young accounts to your file, you just destroying your age. So you're destroying a bunch of that 82.5 points that you're getting from age. Okay, now let's move to the next factor. The next factor is mixture. It's a 4-piece mix that FICO is looking for. Okay, mixture makes up 10% of your score. So in that 10%, you're getting 55 points. Now, it's a 4-piece mix. The 4-piece mix is they want to see a revolving account, which is a credit card, an auto installment, a personal installment, and a mortgage. That's the 4-piece mix. Okay. Now, if you got all 4 pieces of the mix, 9 times out of 10, you're getting that whole 10% that you're getting from mixture. Okay. That's 55 points. All right. It's okay if you don't have all 4 of them, because that's what we're working for. That's what we're working to. Whether you want a house, whether you want a car, or just whether you want a better credit profile so that you can get a lower interest rate on anything that you do in life, right? It's better to be prepared than not be prepared at all. It's better to be ready than have to get ready, okay? The worst thing in the world is you not being in position when you need to be in position. That's the worst thing in the world. That's the worst thing in the world, is you not being in position when you need to be in position. So I'm telling people, like, man, the reason I'm on here every day talking about this is because I know a lot of people that they not in position right now. And God forbids something come up where you have to be in position and you not in position. Then at that moment, you frustrated, you don't know what's going on, and you got reality standing in front of you. You know, and it's bad when you have to do certain things for your family, right? And you're not in position to do it. Now you're looking like a failure to your family. Your kids not going to look at you like a failure because they're your kids. But your wife or your husband might look at you as a failure secretly, right? Because you wasn't able to deliver when you needed to deliver for your family. So it ain't about getting ready. You have to be ready. And what I mean by that is you have to move your feet and stop procrastinating on things that you know that you got to do. It ain't nothing in the world worse than having to provide or having to deliver for people that's depending on you, and you're not able to deliver for those people. And now it runs you out here, you asking people for favors, and all they gonna do is just turn around and talk shit about you or talk about you after they tell you, nah, I can't help you. So you have to make sure that you apply pressure, apply action, and move your feet to get in position to where you need to be. Because if you're not in position, reality right there in front of your face. Okay, so let me go back. Mixture makes up 10% of your score. So in that 10%, you're getting 55 points. All right, it's a 4-piece mix. The 4-piece mix is a revolving account, a personal installment, an auto installment, and a mortgage. And like I said, it's okay if you don't have all 4 pieces of the mix, because that's why we're working to get all 4 pieces of the mix. Whatever you need for your life, or whatever it is that whatever goals that you have that you want to accomplish for your life, let that be the guiding light. Okay. Now let's move to the next factor. The next factor is new credit, which is inquiries. Inquiries make up 10% of your score as well. So in that 10%, you're getting 55 points there too. Now, inquiries can stay on your file up to 24 months, which is 2 years. Okay. You got 2 types of inquiries. You have a soft inquiry and you have a hard inquiry. A soft inquiry is only when you're just checking something and you're not applying for something, right? You're just checking your credit. A hard inquiry is when you actually fill out an application to obtain something using your credit. That's a hard inquiry. Inquiries make up 10% of your score. So in that 10%, you're getting 55 points. It don't matter if you had 150 inquiries or if you only had 50 inquiries. The most that inquiries could affect your file is by 10%, which is 55 points. All right. So now let's go back to the beginning. The lowest credit score that you could possibly have is a 300. The highest credit score that anyone could possibly have is an 850. The distance from 300 to 850 is 550 points in between. Okay, now I just gave y'all 5 factors combined that's creating your credit score. Payment history, 35%, utilization, 30%, age, 15%, mixture, 10%, inquiries, 10%. Do the math. 35, 30, 15, 10, and 10 added up, you got 100%. Anything complete, anything whole is 100%. 35, 30, 15, 10, and 10 combined is 100%. The lowest credit score that anyone could possibly have is a 300. The highest credit score that anyone could possibly have is an 850. The distance from 300 to 850 is 550 points. Now, I just told you, 35% is 192.5, 30% is 165, 15% is 82.5, 10% is 55, and 10% is 55. Do the math. 192.5, 165, 82.5, 55, and 55 equals 550. The lowest credit score that you could possibly have is a 300. The highest credit score that you can have is an 850. The distance between is 550. I just gave you the matrix. I just gave you the formula. Okay? I just gave you the formula. So now what you have to do is you have to take the information that I gave you, look at your credit file, and see where your points is missing at. Because the points are there. It's just sometimes you got things that's on your file that have to come off, and sometimes you need to add things to your file to get the points. Okay? So when a lot of people always talk about credit repair, credit repair, credit repair, credit repair, when I hear that word, I cringe just like somebody got styrofoam rubbing together. It makes me cringe because I don't like to hear the word credit repair, because it's more than just let me help you remove these items off your file. It's more than that. You have to understand the education behind the algorithm and the formula. When you understand how the algorithm and the formula works, you're not only thinking about the things that's on your file that have to be removed. Now you're looking at all 5 factors combined, because all 5 factors combined is what's going to get you the score that you desire. Now, let's talk about, we off that. Okay, let's move forward. Like I told y'all, this video is not going to be up. I feel a lot more comfortable when I talk to people. It's better when I go live and I talk to people, because I'm educating people that's actually listening. This video is not going to stay up. I'm going to download this video, and I'm going to use this video for marketing content for anything that I got going out in the future. So if you have the privilege to be on here right now, I recommend you stay on here and listen. And if you can, take notes, because this is information that's going to be paid content. Okay, it's going to be paid content, and I'm using it for the future. So I'm telling y'all everything. I'm laying it out right now. Okay, so now let's talk about, let's move forward. Okay, so now we just talked about we talked about the formula, right? We just talked about the formula of what's creating your credit. Okay, now it's a lot of people that want houses, they want cars, they want low interest rates. And like I said, some people just want to be in a better position. You know, go in there and close that door, Kira. Close that door. Go close my door. So let's move forward, y'all. My kids, they be knowing what I be doing, and she'll do it just to get my attention. All right. So let's move forward. Let's talk about business credit, okay? And let's talk about business, because at the end of the day, I want you to protect yourself as a person. I want you to protect yourself as a person. How do we protect ourselves as a person? Is we keep things off of our person and we carry it on a business. Okay, so if you notice, I'm always telling people to start a business, start a business, start a business. The reason why you want to start a business is you want to take all liability off yourself and put it on a business, just in case things go left or if things don't go right, you're not carrying the liability on your person. And let me go a little bit deeper into that so you can understand what I'm saying, okay? Now, the objective of what we want to do is we want to optimize our personal credit profile to look a certain way, okay? When we optimize our personal credit profile, and what I mean by optimize is you want your credit profile to look a certain way, okay? Because in the future, when you start moving and doing things with banks and financial institutions on the business side, it's a chance that they might ask you to be a personal guarantor. Now, what's a personal guarantor? A personal guarantor means that this is my business and I'm going to sign my signature to back this situation that I'm trying to do with the bank. So if a bank gave me $50,000 and I was a personal guarantor and anything happened, whatever, or so say, for instance, if the business is not built to the point where it can stand on its own and it need a little more pushing, go ahead and use my personal credit file. See what I've been doing there so that you could make an easier decision on what I'm looking for as far as the business go. Okay. Now, you want to optimize your personal credit profile to look a certain way because you want to operate in business. All right. Now, I just told you guys how to optimize the personal file, but let's go a little bit deeper into optimization. Optimization, I want you to have about 10 accounts on your personal file. Okay, you can have more, but the beginning of the optimization, I want you to have about 10 primary accounts on your file. Remember, we already talked about authorized user and primary. Primary accounts hold more oomph. It hold more strength. It gives it a little bit more push on a primary account because that means that you are individually responsible for that account. So when you optimize your personal credit profile, you want 10 primary accounts on your file. Now, out of those 10 primary accounts, I like to see 5 to 6 revolving accounts, 5 to 6 credit cards. All right. Now, you done cleaned up the derogatory. You don't have nothing negative on the file. You keeping your utilization between 1% and 7%. You got about 10 primary accounts on your file. Out of those 10 primary accounts, you got 5 to 6 credit cards on your file. Okay, that's a good optimized file. Okay, now let's talk about the tiers of credit cards. Okay, you want 5 to 6 credit cards on your file. Now, you want tier 1, tier 2 cards. Okay, a lot of people say, hey, Joe, what you mean by tier 1, tier 2? Well, if you didn't know, credit cards have tiers, okay? Credit cards have tiers. And what I mean by tiers is if I got, let's just say, for instance, let's take my GameStop card. Okay, let's just take my GameStop card. On the front of my card, it says GameStop, but on the back of my card, it says Commodity. That's a tier 3, tier 4 card, okay? Now, let's take another one of my cards. And let me just show you tier 1, tier 2. Let's take my American Express card. On the front of my card, it says American Express. And on the back of my card, it says American Express. That's a tier 1 card. Okay? So out of the 5 to 6 cards that you have on your file, I want you to have tier 1, tier 2 credit cards. Let's take another one of my cards. Let's see. I got a bunch of them too, y'all. Because we play with this credit, you know. We play with it. So I got a bunch of them. And I got a bunch of them. I got some more too. I got a bunch of credit cards. Because at the end of the day, it ain't about how much capital you have. It's about how much capital you have access to. And if you got access to 125,000, that means that I can go do business. And it looks like if I need 100,000 or if I need 50,000, I got access to it. So when we talk about credit cards, we talk about working capital. Things that I can go do. And I got more too. It's crazy. I got a lot of credit cards. But It's a beautiful thing because I ain't scared of credit and I know how to use credit. And when you know how to use credit, you know how to leverage a lot of things in your life. You know, it's easier to go touch 125 or 150 or 260,000 in credit than it is to save 260,000 in cash in your account. But you can use it the same way. Okay. And what I mean by that is, let's just say, for instance, if one of my partners called me and they say, hey, Joe, I got a proposition, man. I want to do this truck company. I found a truck. The truck costs $15,000. Do you want to go in partnership with me? Instead of me pulling 7,500 or the whole 15,000 to get the truck, guess what I'm gonna do? I'm gonna go liquidate some of this 300,000 right here, and then I'm gonna invest in that business. You know? So when I tell y'all, and it's a dope card too, y'all. If y'all don't know about the Apple card, it's dope. I'm just trying to show y'all, right? I'm just trying to show y'all. And I'm going to use this. Like I said, I'm using this content. But listen, credit cards, business credit cards, personal credit cards, credit cards. I got over 200,000 in credit that I can go use to scale and grow any company, scale and grow any business. I could use this to pay my staff. I could use this to do anything that I need to do with it because I properly optimize my personal credit profile. And then once I optimize my file, I built out my business credit the way that I'm supposed to build it out. And then I was able to go get over 200,000 in credit, way over 200,000, probably close to 300,000 in credit. Now, if it's anything that I want to do, right? Instead of me pulling from my checking account or pulling from my savings, I'm going to use OPM, which is other people's money. I feel more comfortable sacrificing the bank's money instead of using the money that's in my savings account. Let's continue. All right. So we just talked about the levels of cards. Now, to optimize your file, I want you to have about 10 primary accounts. And out of those 10 primary accounts, I want you to have 5 to 6 revolving accounts. So 5 to 6 tier 1, tier 2 credit cards. I don't know who on here. I don't see nobody talking back, man. I guess I ain't giving enough good information for y'all to shoot me some 7s and let me know if you digging the information, if it's registering, you know. But anyway, let's keep going. Now, the reason why you want to optimize your personal credit profile to look a certain way is because when you establish the business, right? Now we finna start operating on the business side. We didn't got everything situated on the personal side. Now we're about to operate on the business side, okay? I'm about to operate on the business side. Man, Chuck, appreciate it, bro, because I sure don't know, cuz. I sure don't know, man. I appreciate it, man. And I'm talking slow because I want everybody to get it, bro. I want people to get it, man. And I want y'all to get it. That's why I'm talking so slow, because I want y'all to get it, okay? So now, let's move forward. You already optimized the personal credit file, okay? We know that we got it optimized, so we know that we solid, we strong. So when we walk in the bank, whatever we going to get at the bank, we going to get it. All right, but we ain't walking in the bank on the person. We walking in the bank about business. Because remember, I want you to protect the person and I want you to carry all the liability on the business. Okay? I want you to carry all the liability on the business. Now, come on, Joe. Here we go. I'm finna lay it down. Here we go, y'all. So listen to me. What you do with one business, you could do with every business. But let's talk about one business first, okay? Let's talk about one business first. You're going to structure your business the right way, all right? Foundation is everything. So once you structure the business, right, you get your EIN, you got your entity, you got everything structured, you got your business address. Take that residential address. You want to make sure you got a virtual address. If you don't have no brick and mortar for your business, go get you a virtual address. Okay, no P.O. box. We don't want no P.O. box. Okay, we need a virtual address or a brick and mortar, some type of business address. You don't want a P.O. box because a P.O. box is a red flag. Ain't no bank really gonna give you nothing if they see that your business address is a P.O. box, because you can shut it down and go away with whatever you got from the bank. You want, here we go. They calling my phone. Here we go. So here we go. And I apologize, y'all. I ain't tripping because I'm gonna go back in here and cut this video up. So anything that happens, I go and cut it up when I need to cut it up, and I take what I need to take from it. All right. So here we go. Most people, when you start a business, most people, what they do is they go get one bank account. I don't want you to get one bank account. I want you to go get 5 bank accounts on that one business. Okay. Now, when you open up those 5 bank accounts on that one business, I want you to move your money through all 5 of those accounts. And what I mean by move your money, I want you to make deposits here, make deposits here, make deposits here, make deposits here. So you're moving money through these accounts. And by you moving money through these accounts, what you're doing is you're establishing a relationship between you and them. You building a relationship. Okay. Now, after you done moved your money through these accounts 90 to 120 days, you look like a solid member, because you putting money in, you taking money out, you moving money, you moving the money through. Okay. Now, after you done been there 90 to 120 days, and you already successfully built out your business credit, built out the business the way it needs to look. Now, on business credit, I want you to make sure that you got you need at least 12 to 14 vendor accounts attached to your business. Now, even on business credit, there's tiers. You got 4 tiers. Tier 1, Tier 2, Tier 3, Tier 4. Tier 1 is going to be some of your net 30 accounts. Okay. Tier 2 is going to be some more net 30 accounts. You might get some net 60s, net 90s there, but you got to have a certain amount of trade accounts reporting to the business before you get to Tier 2. By the time you get to Tier 4, you got about 12 to 14 vendor accounts attached to your business. Now, by the time you get to Tier 4, the business is strong enough to stand on its own 9 times out of 10 without a personal guarantor. Okay? Now, business credit is on Paydex. Paydex is from 0 to 100. A 80 plus Paydex score is equivalent to a 750 personal credit score on the business. So you want to get your business Paydex score up to an 80 plus. All right. Now, a lot of the vendor accounts that most people get, the first 3 accounts that most people go get is Uline, Granger, and Quill. Okay. Those are good accounts. They cool. But guess what? You're not going to shop with them every week. You're not shopping with them every month. You might shop with them every few months. So the more that you use your business credit, the faster your business credit grow. So I tell people in my program, I say, man, let's shoot for some fuel cards. You want to get some fuel business cards, because guess what? You constantly using those fuel cards. Wherever you go, you got to drive. So why not use your business credit fuel card? And that way you constantly using your business credit. So now your scores is constantly increasing. All right. You got to make sure you structure all of that. All right. You got to make sure you structure all of that. Now, and I'm jumping around right here now. Now, you open up those 5 business bank accounts. You move money through all 5 of those accounts for 90 to 120 days. After 120 days, you go in the bank and you say, hey, I'm interested in some of your banking products, business banking products. And they say, well, yeah, we got a nice business credit card, such and such, such and such, such and such. And you apply for it. Okay. And they say, hey, Mr. Such and such, do you mind being a personal guarantor? Now, you already optimized your personal credit profile, so you don't mind being that. And especially if you're not doing no BS, if you're not out here just doing no garbage, no trash business, you out here doing legitimate business, then it's okay with being a personal guarantor. Okay. So now let's just say, for instance, if that bank say, hey, here go 25,000 on the credit card. Now you did that times 5. Now you just went and got access to 125,000 in 7 to 14 days. Man, listen, y'all let me know if y'all hear me, man. Y'all let me know if y'all hear me. You just went and got access to 125,000 in 7 to 14 days, all on the business. Now, the beautiful thing about getting revolving accounts on the business is that utilization does not track on a personal file. So therefore, you always keeping the personal file optimized. So you don't have to worry. So if y'all know that if you got a credit card now on your personal file, the higher your utilization go, the lower your score go. Okay. The beautiful thing about having business credit cards is that you don't have to worry about the utilization being recorded on the personal file. You know, the utilization you don't have to have it work. You don't have to have it work. You don't have to worry about every time you use that card that is going to affect your utilization on a personal file. You know, so you know, you want to operate on a business. And then guess what? The only thing that attached you to that business revolving account was that inquiry that you got. But remember, you could get inquiries removed off the personal file that you don't have accounts that's showing on your personal file. So let's say, for instance, if I went and applied for an American Express credit card on a business and they use me as a personal guarantor, I got it. I'm secured with it. Everything good. It's on the business. It's gone. But I got this inquiry from me being a personal guarantor on my personal file. Then I could write a letter and say, hey, remove any inquiry that I have no account with on my personal file. And now what they're going to do is they're going to look through your file, or they look at the credit report. They don't see they see American Express inquiry, but they don't see no American Express card. So they're going to say, okay, this is one of the inquiries he need to remove. So they remove it. Okay. The only thing, and then when you move to the next business, because we ain't even talked about that yet, when you move to the next business and you apply for that same thing that you did with the first business, the only regulation that they had of you doing it with the other business was that inquiry. But the inquiry is no longer there. So remember, I just showed you how to go get 125,000, right? And I told you earlier, whatever you do with one business, you could do with multiple businesses. So let's just say, for instance, if you did that with 5 businesses, right? Now you just went and got access to 625,000 on credit. I think that's enough content for me right now. So I'll stay on here for a minute, man, and I'm done, y'all. That's it. So drop a 7 if you learned something, man. Chuck, you know it, man. You know anything you need to know, bro. Just you know how to reach me, man. You know how to get with me. But you know, y'all got to take this information, man, and make sure y'all do something with it. You know, yeah, MP. You already know, bro. You know me, man. It's just about pouring back, man, pouring back to our people. You know, so that we can get up to that next level, you know? So I'm finna take this content and cut it, man. I gotta cut it down, man. I'm finna cut it, put it out there, make 30 videos with it. Cad Money, there go Cad Money just checked in. But y'all go get it, man. Listen, it's over 300,000. Well, probably close to 300,000 right here in my hand. Okay? And then I probably got another 50,000 in another wallet somewhere, but y'all go do what y'all got to do, man. Position yourself and go get it, you know? So with that being said, I'm gone. This phone ringing. I'm finna see who this is, because if anybody calling me on this phone over here and y'all on this live right now, we gonna have some to talk about. If I look at this phone over here and I see any of my folks that's on this live video phone call that I missed over here, we gonna have something to talk about, man. All right, man. I'll talk to y'all in a minute, man. Y'all be good. I'm finna get to work. We finna get busy. And I'll holler at y'all later, man. Y'all be good. Peace.